Hey everyone, welcome back to Corporate Decoder. Today we're dissecting Granite Construction Incorporated's latest annual report, and let's just say they've been busy. Imagine trying to build the country piece by tiny piece, while also, well, you'll see. Alright, so this is Granite Construction's big annual report, the 10K for their fiscal year ending December 31st, 2025. They're basically one of the biggest civil contractors and construction materials producers in the US. Think roads, bridges, tunnels, all that essential stuff. And if you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed and consider joining our Discord community, linked in the description below. Now, they've been around a long time, incorporated way back in 1922, and they've grown a ton, especially recently. They operate with a home market strategy, meaning they have teams deeply rooted in local areas, which is smart. They have operations in states like Alaska, Arizona, California, pretty much all over the map. Their business is split into two main parts, construction and materials. Construction handles all the big infrastructure projects from highways to tunnels and even solar farms. The materials side is all about producing and selling things like aggregates, asphalt, and recycled stuff, both for their own projects and for other companies. A big chunk of their business, about 70% of their construction revenue in 2025, comes from government agencies, and their biggest customer by far is the California Department of Transportation, known as Caltrans. They brought in over $446 million from Caltrans alone in 2025. That's a huge chunk of change. One of their key strategies is vertical integration. That basically means they control more of the supply chain. They own or lease their own gravel pits and processing plants, which gives them a big advantage. They've also been on an acquisition spree, buying up companies like Warren Paving Papich Construction and Cinderlite. These two companies, Warren Paving and Papich Construction, alone added over $700 million in cash to the deal. That is a serious investment in growing their materials business and expanding their reach. Let's talk about people. As of December 31st, 2025, they had about 2,500 salaried employees and over 3,300 hourly workers. They emphasize employee safety as their top priority, which is crucial in this industry. Now, for a look at future business, their committed and awarded projects, or CAP, was a massive $7 billion at the end of 2025. That's a strong indicator of work lined up for the future. About $3 billion of that is expected to be completed in 2026. Of course, it's not all sunshine and smooth roads. They face risks like unfavorable economic conditions, which is pretty standard, but more specifically, they rely heavily on government funding, so any cuts or shutdowns in government spending can really hurt them. They also deal with fixed price contracts, meaning if costs go up unexpectedly, say, due to inflation or supply chain issues, they eat the difference. And like many companies today, cybersecurity is a big concern, especially with the rise of AI. Any breach could lead to serious disruptions and costs. Let's dive into the numbers. Total revenue for 2025 was over $4.4 billion, a nice jump from $4 billion in 2024. The construction segment is their biggest, bringing in over $3.6 billion. The materials segment is growing fast though, with revenue jumping to almost $770 million. In their construction segment, 71% of revenue in 2025 came from public projects and 28% from private ones. For materials, aggregates revenue saw a huge boost, nearly tripling to over $300 million, while asphalt revenue also grew nicely. This shows the impact of those recent acquisitions really kicking in. Gross profit, which is basically revenue minus the direct costs of producing goods or services, was over $711 million for 2025. That's a healthy increase from $572 million in 2024. Their gross profit margin overall improved to 16.1%. Selling, general and administrative expenses, or SG&A, went up to over $407 million. A big reason for this increase was higher salaries and increased incentive and stock-based compensation, likely due to that improved financial performance we just talked about. The acquisitions also contributed to these higher administrative costs. They also had other costs net, which included things like acquisition and integration costs. For 2025, this was about $41 million. Much of this related to integrating those new companies they bought. Interestingly, in 2024, they had a significant loss on debt extinguishment, but that didn't happen in 2025, which is good. Overall, their other income expense net swung from an expense of $11 million in 2024 to a net income of nearly $7 million in 2025, largely thanks to not having that debt extinguishment charge. And the bottom line, net income attributable to Granite Construction Incorporated, was over $193 million in 2025. That's a big leap from $126 million in 2024, and a massive improvement from just $43 million in 2023. Clearly, these acquisitions and improved operational execution are paying off. Looking at liquidity, which is how easily they can access cash, they had over $529 million in cash and cash equivalents at the end of 2025. That's a solid amount, though a bit lower than the previous year. Cash from operating activities was about $468 million in 2025, slightly up from the prior year, showing their core business is generating good cash flow. However, investing activities used almost $1 billion in cash, mainly due to those big acquisitions. Selling off assets brought in some cash, but not nearly enough to offset the spending on acquiring new businesses. Financing activities provided a big chunk of cash, over $475 million in 2025. This primarily came from taking on more debt to fund those acquisitions. To pay for those acquisitions, they really leaned on debt. They entered into a new credit agreement in August of 2025, which provided them with a revolving credit facility and a significant term loan. Now, about those convertible notes, they have these 30-5% convertible notes due 2030. The cool thing about these is that if the company's stock price goes up enough, holders can convert them into shares of Granite stock. As of December 31st, 2025, one of the conditions for conversion was met, and the principal amount of these notes, over $373 million, has been reclassified as a current liability because they might have to pay it back soon. Their effective tax rate dropped from over 28% in 2024 to under 24% in 2025. This was mainly because they didn't have those big non-deductible debt extinguishment costs eating into their taxable income. Getting back to the segments, construction revenue saw a solid 7% increase, thanks in part to the newly acquired businesses. Materials revenue, on the other hand, surged almost 30%, really showing the impact of those strategic purchases. When it comes to employee compensation, particularly for executives, they use stock-based awards like restricted stock units, or RSs. These vest over time, and the cost is recognized over that vesting period. The total compensation cost for RSs was around $39 million in 2025, a significant increase from the prior year, which makes sense given the company's improved performance. Let's look at those acquisitions again. Cinderlite, bought in October 2025 for about $58.5 million, is a materials, landscape supply, and transportation company. Warren Paving, acquired in August 2025 for a hefty $540 million, is a big asphalt contractor and aggregate producer. And Papich Construction, also bought in August 2025, cost $170 million and is a construction services and materials provider in California. These deals significantly boosted their materials segment and expanded their geographic reach and vertical integration. They also provided pro forma information, which shows what their results would have looked like if these acquisitions happened earlier. For Warren Paving, the pro forma revenue was over $4.2 billion in 2024, and for Papich Construction, combined revenue would have been over $4.1 billion in 2024. These numbers highlight the massive scale of these additions. My take on all this is that Granite Construction is making some really bold moves to grow. They've clearly identified the material segment as a key growth driver and are investing heavily through acquisitions. The construction segment is also performing well, benefiting from strong public infrastructure spending and improved project execution. The risks are definitely there, especially around government funding and the costs of those acquisitions, but the company seems to be managing them well for now. The jump in net income is a strong signal that their strategy is working. So, what is your take on Granite Construction's aggressive growth strategy and these financial results? Do you think these acquisitions will pay off in the long run? Drop your thoughts in the comments below. If you found this breakdown insightful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join the conversation on our Discord community, linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.